All right, guys, welcome back for another video. Well, we finally got some volatility in the Bitcoin market. It feels like price has been contracting for, weeks, if not months, or basically what felt like forever. And now we're finally seeing that expansion, seeing it expand to the upside. I want to follow up on the trade I took at the bottom of the range and also kind of lay out my rationale for why I think price is, confirming a break to the upside and what kind of price distinctions I'm looking at, and kind of what helped me form my bias that this would break to the upside, and how did I identify the range? In order to do that, I need to mark off the previous FOMC meeting. That's the for those who aren't familiar, the Federal Open Market Committee, basically the Federal Reserve meeting where they set interest rates. That we had one back in September. We'll have another one coming up soon at the start of November, so we'll mark that off too. But you have your FOMC meeting coming in right there. And this is just the quarterly open, the start of Q4. And we can also mark off the next FOMC meeting, which comes in, I believe, November 2nd. So during the day on November 2nd. And so anyway, so we'll go back to this FOMC meeting back from September. So basically the FOMC meeting or the press conference, where the data leaked to the market, hit the market right here. And then you see this volatility whipsaw effect right here. So you see the FOMC meeting data hits, and then price runs up above these highs right here, and then runs down below the lows right here, and volume comes in, starts peaking. This is on Coinbase, a spot exchange. Remember, I'm primarily concerned with the spot exchanges because I do believe that the spot market does drive the market. And I see, this stop run below this low during the FOMC data, in volume peaking right there, and then price immediately off that high volume stop run starts closing back within the range. That's a classic signal that you just had a major liquidity run, and that this will ultimately be a swing low. So we kind of have the volume signature coming in there, identifying that it's a swing low, coming in the type of time in the market, during a significant event where you will typically see those swing lows. I remember if you go back to any FOMC back for the last few years, they typically mark, bottoms in the market, even during a prolonged downtrend, right? Which is kind of surprising because if you go back and test it, you'll find that FOMC, even though they're announcing interest rate rises and further interest rate hikes, typically serves as a bottom in the market, at least temporarily, just because the event itself alleviates some of the uncertainty that exists in the market. Even if it isn't the most bullish news, it still alleviates the uncertainty of the worst possible scenario. So with all that in mind, we see that type of distinction play out. Now, again, we don't have the swing low until it ultimately becomes a swing low. But when you see this volume signature come in, the stop run closing back in the range, and then price reaches for the high, then you start getting your confirmed swing low right there. So it's sort of one of those things where it does build on itself, and there's certain things you want to see to kind of validate that opinion. And then once we see this, kind of solidify the swing low, that's when if you are a confirmation trader, right, you want to be trading this retracement here back into this level, because that was also a great opportunity to get long right here. And you have these periods of volatility contractions, but if you notice, the periods of volatility contractions are breaking to the upside, right? Because the buy pressure and the bids in the market are now changing. The market's changing its state of delivery. So we had a major capitulation in June, where most there were more losses taken in Bitcoin than any other time in history. But that changed around, and when you have a capitulation, a lot of times that marks a pivot in the market, and we're seeing sort of the downtrend behavior kind of pivot to the uptrend, right? And we see that in the fact that these, following the last FOMC meeting, the volatility contractions are all breaking into the upside. So, you get this volatility drawing away from the market. At this point, the bids outnumber the sell orders or the offers, and then price breaks up, right? And then that confirms your swing low right here. Then you get another volatility contraction here, and price breaks up. Again, the bids outnumber the offers. And we get another, this is another push down. So this is really interesting. So we talked about how the volume signature came in pretty dramatically right here. And that kind of showed us that this, the fact that it came in there and then closed back within the range, that this might be a swing low. We have the same thing here, just even more dramatic here. So you get an extreme volume peak right here. And then price dramatically closes back within the range. I mean, you can see, look at how much bidding came in this area. Now, what's interesting here is that price ran just below this low right here, about $20 below on Coinbase. So the low here on Coinbase was 18,153, and right here it is 18,131. So coming $20 below there, that's all it took to have these massive bid orders come into the market. And if you can go back, I mean, this volume surge right here on that bottom was the highest 4-hour candle, relative to any period, really. I mean, this is the capitulation right here. This is where you had the highest realized losses taken in Bitcoin, and the bottom candle right here had higher volume. So again, anytime you see like an extreme market read like that, it's something to pay attention to, because you don't see it often, and it typically marks an extreme in both market psychology and market structure. When we're looking at different distinctions in the market, we want to focus on the things that are extremes, right? The things that take place at the extremes, because that's where the most edge is. But anyway, that's a topic for another video. Basically, what I'm trying to illustrate is that, you see these bottoming formations, and then you see the volatility contractions, and then the volatility contractions, continuously break upwards off these levels, right? So you got your volatility. Let's see, volatility contraction right here, dries up, breaks up. Then it from this high to this low, and then forms a narrowing range, breaks up again, taking out the highs. Then you get the run below here, but then it's a little bit of an expansion in volatility before drying up again, and then expanding upwards right here. And now I think, we're kind of at the area in the market where this whole consolidation is ultimately going to break to the upside. And if we go back to the FOMC range identified here, you're seeing this expansion of volatility, coming off a contraction, and then you see an expansion, run down within the context of a higher time frame level. We'll just pull everything off the chart right here. So you saw that one last flush out, right? So run up, run down, contract, and now it's kind of curling around and expanding. On the RSI, you've got your weekly divergence on the RSI. Remember, we've never had weekly divergence on Bitcoin ever in Bitcoin's history, and it's confirming itself right now, right? You'll get that true confirmation once you get a close above this level. So as long as Bitcoin holds, really above any of the previously candles closed, but basically as long as Bitcoin closes at the current price roughly and doesn't have a dramatic sell-off, it will confirm that weekly bullish divergence. Again, the only weekly bullish divergence we've ever seen in Bitcoin price. And this this is a capitulation bottom, a rounded bottom forming at the capitulation lows. You know, I do understand how people could form a bearish bias, particularly based off what's going on in the world and what the potential nuclear disaster and whatever. But if you're focusing solely on price action, and when I say price action, what I mean is like what's happening right now, then it's a little more difficult to get bearish. Uh, just considering everything we're seeing now. Again, does that mean that price has to do exactly what we think it will do? Well, of course not, right? I mean, there are no guarantees. Price can do a number of things. Of course, price can go lower, but if we're playing a game of probabilities, then we want to position ourselves for the probability that is the most likely scenario, right? Not just hedge ourselves against the worst possible scenario that's extremely unlikely. Now, there is a little bit of a macro event going on that could be a catalyst for what's going on, and that's particularly what's going on with the Treasury buyback program and the reverse repo market, particularly incentives around incentivizing capital to flow out of the reverse repo market into the bond market. But that's a topic for another video, and I think I'll record a video on that subject a little bit in the next day or so. So keep an eye out for that. And if you guys haven't already subscribed to the channel, please just make sure